Oh brother, oh brother, oh brother, it's about to go down.
Now, I don't necessarily mean that the market is actually about to go down. Of course it might, but it also might skyrocket higher, because what I really mean when I say it's about to go down, we're about to get the FOMC interest rate decision. That's very nerdy financial talk for the Fed, led by Jerome Powell, is about to tell us what in the world is about to go down with interest rates. Right now, the odds are saying they're going to keep them constant. They might go up, they might go down, and we have a lot to talk about of what that means, what that doesn't mean. And in this video, we have a little bit of Fed FOMC breaking news that I pray you are watching before the market really gets rocking tomorrow, July 30th. But very quickly, before we get into all that fun stuff, if you haven't already, don't forget to like, subscribe, share this video with your grandma. And with that being said, let's rock. So as I said, it's about to go down. I'm filming this on Tuesday, July the 29th, and we are getting the FOMC interest rate decision and Fed Powell's speech tomorrow, Wednesday, July the 30th. The speech will be going down at 2:30 p.m. Eastern, and the interest rate decision will be announced at 2 p.m. So this is basically all in the afternoon, and you bet your bottom dollar it's going to prompt a lot of volatility. Now, going into this, you should know that the overall market, the S&P 500, did clock a new all-time high. So did the Nasdaq. As of right now, Bitcoin's a little bit off from his all-time high, but pretty close. And we're actually seeing a bit of strength starting to develop in the dollar. So that's pretty much your snapshot as we go into this July FOMC meeting. In reality, you don't have to search that hard to see that all of mainstream media, all of the talking heads have some hot takes. A divided Fed eyes future rate cuts, but won't move this week. Fed expected to keep rates unchanged as it sifts through mixed economic data. Don't expect a rate cut from the Federal Reserve. So basically, they're all saying the same thing. Pretty much everyone who has the ability to write headlines is saying, hey, things might get a little crazy, but we are not expecting a rate cut. And in fact, I can give you the exact odds for the chance of a rate cut or lack thereof. As of this moment, there's a 98% chance that we stay at 4.25%. Right now, current target rate is 4.25%. Once again, 98% chance of staying here, which means there's a 2% chance of getting a 25 bips rate cut down to 4%. All right, so the first logical question, how in the world do we come up with these odds? Well, these odds are actually coming from the market, as in people putting their money on the line saying, hey, here's what we think is going to happen to interest rates. So these odds, once again, from direct bets in the market. Now, then the second question is, why do people have such high confidence in these particular bets? Well, the Fed within the US, our central bank, is very easy to predict. The rules that they consider when jacking up rates, bringing them down, or going sideways are very well known. You could do the math. I could do the math. You could go have Google do the math. You could have AI do the math. They've taken very well-known, very well publicly stated numbers such as inflation, unemployment. They put it into this algorithm and it outputs a number, and then we get the answer, and that answer is the interest rates. They don't really, quote unquote, surprise us that often. That's exactly why the market is so confident. Once again, because the algorithm they're using of saying where we should be at is very well known. I suppose this then brings us to the third logical question of, all right, if we know what's going to happen and we know why it's going to happen, the big question is what's going to happen in the market? And this time around is the first time in quite a while where we actually might get more volatility than anticipated. And the reason is because this vote, this FOMC vote, might be the first one we've had in a while where not everyone agrees. Before this, for over a year, we've had unanimous votes. They've all agreed on exactly what to do. This might be the first one where a couple people say, nah, honey, I think we should be doing something different. In fact, officials are split into three camps over what economic evidence they need before resuming rate cuts, with two governors prepared to dissent. That's exactly what might cause some craziness. How many people are going to dissent? What are they saying? What is their vibe? So the first group are the centrists. This group of centrists have signaled openness to reducing rates later this year, but wants to study at least 2 more months of inflation and labor market data to see the pass-through effect of tariffs aren't as bad as feared and the economic activity isn't reaccelerating. By the time the Fed meets again in September, there's no meeting in August, officials will have seen 2 more months of employment and inflation data. most of the voting FOMC members are in this group of saying, hey, we're going to cut rates. We want a little bit more information just because the tariff news is settling down right now. They don't want to jump the gun because historically that has some really, really adverse impacts. So they're basically saying, okay, 2 more months of data, next FOMC meeting, that's when we'll start cutting rates. The next group, which is actually the smallest, is saying we should probably cut rates now because what's 25 bips amongst friends? The group of cautious centrists, that's the name of this group, faces opposing minorities. 2 Fed governors have signaled that they could dissent this week, preferring to cut rates right away. They know that their 2 dissenting votes isn't really going to matter. It's actually not going to get rates to be cut, but it's them just saying, hey, we're closer to getting rate cuts than staying where we've been at. And then the third and final group, which has a lot of people feeling a lot of different ways on the other side of the debate, is the third cluster of Fed officials who will want to see evidence of meaningful economic weakness before cutting, given their concerns that higher prices are in the pipeline. So this is on the other extreme of saying, we're not even that confident, we want to cut in September. And just so you know, because we're here, you could check out the tool yourself. It's called cmegroup.com. It's the Fed Watch tool. Looking at the September rate cuts, right now there's about a 63% chance that we do get a 25 bips rate cut, and there's actually a 1% chance that we get a 50 bips rate cut. So at this point, it is more likely than not that in September, we do get a rate cut. So here's the TLDR. We know what's going to happen tomorrow in terms of the announcement. There's going to be no change to the rate, but we don't know is how the markets are going to react. The S&P 500, the NASDAQ, individual equities, the dollar, Bitcoin, gold, bonds, everything else in between, because we don't know what's going to be going on with these dissenting voices, which has not happened in literally in excess of a year. With that being said, I think it's pretty safe to say that no matter what happens, Trump's not going to be happy. There's going to be no rate cut, and then all of a sudden tomorrow, Trump's probably going to have some not so nice things to say about the chairman of the Fed, Jerome Powell, because obviously he wants him to bring it down by 3 basis points, which is absolutely massive. It's never going to happen. But obviously Trump has his entire base riled up to specifically not like what Jerome Powell's doing. But it's on that note that I want to share something. Even though Jerome Powell is the chairman of the Fed, he could technically be outvoted by the other FOMC members. I should also note that, don't forget, Trump is the one who put Powell into place. He's the one who gave him the power. So this whole debate back and forth of them not liking each other, I do find it to be a little bit ridiculous. The Fed chair doesn't set rates by himself. Here are the other voting members. Powell chairs the central bank's 8 annual meetings, but the other 11 voting members of the Federal Open Market Committee, or FOMC, get an equal say on each Fed rate division via a majority vote. Despite some lively debates at recent meetings, the Fed's 4 no-cut calls so far this year have been unanimous, as in no dissenting voices. This group is set to hold interest rates steady again this week, yet 2 voters have outlined a stance in favor of cuts. So they've quote unquote outlined it. We don't know which way they're going to vote, but regardless of which they do vote, they are not going to have the majority to be able to get this rate cut. So I just want to offer a little bit of clarification that this isn't exclusively Jerome Powell's show, but yes, he is the chairman of the Fed, and I suppose heavy lies the crown. But I also want to point out, nominated as Fed chair by Trump, renominated by President Biden, and his term will be ending in May of 2026, just so everyone knows. And that's the whole thing of should he get fired, and can he even legally be fired by the president? And even if he does, it's going to get cut off in the justice system. And by that point, are we at May of 2026 anyway? Basically, there's 2 things we definitely know. He's not going to get fired, and the rates are not going to be cut this month around. But even though we do know those 2 things, that doesn't mean that we're not going to have volatility. In fact, I'd be betting that we have a lot of volatility. And if you watch any of the live shows, and just so you know, shameless plug, every single day, Monday to Friday, 9 to 11, there's a live show where I did generally trade my own accounts. We'll be doing that tomorrow, but we're also going to be doing a specialty stream for this FOMC interest rate decision at 2 p.m. and then obviously Powell's speech at 2:30. So there's going to be a specialty stream. I hope to see you there. And if you've watched any of my shows, you know that I don't like to predict. I think if anything, active trading is a game of reacting, not predicting. But with that being said, I would love your predictions. By market close tomorrow, Wednesday, July 30th, do you think the market's going to be sky high? Do you think it's going to be ground low? Or do you think it's going to be choppy, and we end up somewhere in the middle? I would love your best guess in a comment below. I appreciate you stopping by. I appreciate all the good vibes. I'll catch you in the next one. Peace.